let's head to East Africa, where it took less than 12 hours for Kenya's Chase Bank, a mid-tier lender, to go from, of course, telling its clients and shareholders that all is well, to landing in receivership for a year. Now, with its fall, the number of banks which are either in receivership or liquidation in Kenya comes to 4. All of this has happened since Dr. Patrick Njoroge, who took over as governor of the central bank, when CCTV's Ramah Nyang spoke to the CEO of the Banks Association about this. He asked why the central bank would not have been able to save Chase Bank as a lender of last resort.
When the withdrawal goes to levels where the bank is not able to meet its obligations to the clearinghouse by the end of day, and it can't get borrowing, because the interbank market should be open for it to be able to borrow. If they can't be able to borrow from the interbank, then even extending accommodation for that night will not help, because of the fact that the next day, same thing will continue. So in order to avert a run on the bank, which then affects the depositors, central bank then takes the decision to close it at that point in time.
So in short, if the central bank did act as a lender of last resort, it would essentially be throwing taxpayers' money into a black hole.
You will not have solved the problem, because if you lend them, for example, overnight to clear the day's obligation, and then the next day more depositors are coming to withdraw their deposit, then they'll have to continuously get to the window, and at the end of the day you're not helping the institution. The best thing is to actually stop it from proceeding, sort out the issue, and then reopen the bank after it has settled.
Okay, let's wrap this up. As a sector, as bankers, all 40 plus members of your organization, you're facing a confidence crisis. I know, for example, that Equity Bank's holding an investors conference call on the 8th of April at about 11 in the morning. Is this perhaps the trigger for you guys as banks to then sit down and say, okay, we need to consolidate, because clearly there's a liquidity problem on the lower end of the market, tier 2, tier 3 banks, in order to essentially get ahead of this crisis and nip it off in the bud?
Actually, the debate on consolidation is a little bit more complex than that. A number of examples have been given of entities that have, or other jurisdictions where there has been consolidation.
Nigeria being a favorite example for a lot of people.
I mean, there is the Nigeria case, for example. There's South Africa, where there is a smaller number of banking institutions compared to either the size of the economy or the population.
Yeah.
And my challenge with that is the fact that if the objective is to achieve, for example, financial inclusion, to achieve economic growth, to achieve the level of depth of the financial market, then by consolidation itself, that will not be a solution. I'll give you an example. Like, for example, in Nigeria, the level of financial inclusion is inferior to Kenya. Similarly to even South Africa. Kenya, we have advanced to the stage where we have got a much more superior financial inclusion situation than we have in those two economies. And yet we have got the 43 banks serving a smaller population compared to the two.
But here's the counter argument I would give to you, Habil. 80% of assets in this banking sector held by just 7 banks. Right? So about 20% is essentially being struggled or fought over, if you will, whichever choice you want, or word you want to apply there, by the remaining 30 plus. I mean, surely that does make the case for essentially, because as things stand, we already have a highly concentrated banking sector. So what value are these 33 plus banks adding?
But the critical thing is the fact that those specific 33 plus banks are serving specific sectors of the economy. They have got their niche market which they are serving, and those particular niche markets are not being served by the large banks. So in a way, if you then force consolidation, what you are going to achieve is that those specific niches that the small banks are serving will no longer be served. There is also the other problem, by the way. In the developed markets, one of the challenges they are having now is the so-called too big to fail challenge. Now, when you have got systemically important institutions in the financial services sector, that's the challenge you've got to confront. And currently, I don't think we are well placed to be able to handle that kind of a problem compared to the problem we have right now. Systemically important financial institutions are a challenge, even for the regulator, to be able to manage.